Okay, so let us go ahead and take an example on IND AS number 115 on revenue from contract with customers. Now, I strongly feel this sum is really important for the November 2024 examination. And this particular sum we are going to discuss has come in November 2016 examination CA final. It is a question based on accounting standard number 7 on construction contracts. And now you know that now that is all covered by IND AS number 115 on revenue from contract with customers. Now let us take on this example, and the accounting is very similar to the accounting as per IND AS 115 is very similar to what has been discussed in AS 7 on construction contracts. So this sum can be an examination question now in the new syllabus. So learn this example really well for your examination. So let us go through the question first, okay? And then I'll tell you how all the 5 steps. Now your IND AS 115 is based on 5-step approach, where all the 5 steps are covered, and I'll tell you how to go about the solution. Okay, let us first go through the question. Yes, Renuka.
A construction contractor has a fixed price contract of rupees 13,500 lakh to build a railway tunnel.
Now let us assume that you are the construction company. So you are the service provider. So you are the construction entity, and your customer is a railways. So you're going to construct a tunnel for them, and that is a performance obligation. That's a promise they made, that you're going to construct a tunnel for the Indian Railways. Next.
The contractor's initial estimate of contract cost is 12,000 lakh, and it will take 3 years to build the tunnel.
Yeah, so 12,000 lakh is the initial estimate of cost, and this might change over time. But what is the transaction price fixed? It is 13,500 lakh rupees. And that is supposed to be the transaction price. That is for the work you're going to undertake for the customer. Next.
By the end of year 1, the contractor's estimate of contract cost has increased to 12,075 lakh.
That means the total cost, that is the estimated cost of construction, is going to be how much? 12,075 lakh. And what is the cost incurred in the current year?
In year 2, the railway authority approves a variation resulting in an
increase
in the contract.
Oh, they're given the data for year 2.
They're given the contract cost later.
Later. Okay, then read further.
So in year 2, the railway authority approves a variation resulting in an increase in contract revenue of rupees 300 lakhs.
Now people should notice this. There is an increase in contract price or the transaction price because of some variation to the contract. Example, they might ask you to extend. Now the railways ask you to extend the tunnel further, maybe another 1 kilometer. And that is going to cost you how much extra? I mean, you're going to charge the customer how much? 300 lakh extra. And that is nothing but a contract modification. As per IND AS 115, what is it called? The contract modification. Now here there is a contract modification. No additional good or service is added to the contract. Instead, only a change in the design or change in, that is just an extension of the same, tunnel. It is not another good, a distinct good or service being added, right? So therefore here, it is a contract modification, only a change in the transaction price. Now I can say the transaction price goes to how much? Will be 13,500 lakh plus another 300 lakh. Will become 13,800 lakh. From year 2 onwards, the transaction price should be 13,800 lakh. There is an increase or a change in the transaction price as a result of a contract modification. Yes.
And estimated additional contract cost of rupees 225 lakh.
It's going to cost you extra 225 lakh. Now we know that the cost was 12,075 lakh end of first year estimated, plus another 225 lakh. In all, how much? 12,300 lakh will be the total estimated cost of the contract, right?
Yes, sir.
There is a revision in the cost because to earn that extra 300 lakh, you had to spend extra 225 lakh. Next.
At the end of year 2, cost incurred include 200 lakh rupees for material at site to be used fully in year 3 to complete the work.
Please highlight this. It is given that in the second year, end of year 2, the contract cost incurred up to second year, that amount includes rupees 200 lakh worth of materials which are at the site but not yet used on the contract. Nothing but what? Materials not yet consumed.
Yes.
Next. Now you can highlight that if you want to.
So contract cost incurred up to the reporting date of year 1, 3,139 lakh.
Please remember, it's given that the contract cost incurred up to the end of. Now tell me, year 1, what is the cost incurred?
3,139
It
lakh.
is 3,139 lakh is the cost incurred in year 1. And what is year 2?
9,102 lakh.
You know, this 9,102 includes 3,139 lakh. Because these are costs incurred up to the
date.
There's year to date, or in this case, I can say the 2 years. Okay, that is cumulative. So 9,102 lakh is a cost incurred up to the end of the reporting date. So and this 9,102 lakh includes what? The 200 lakh worth of materials not yet used on the contract, which is included over here. Next.
Year 3, 12,300 lakhs.
12,300 lakh. Remember, that is our total cost.
Yeah.
That is again, that includes what? That includes a cost incurred in year 1 and year 2 as well.
You are required to find out the amount of revenue, expense and profit to be recognized in the statement of profit and loss in all the 3 years.
Okay, it's a 3-year contract. Okay, that is, it is completed over time, over a 3-year period. Now, how does IND AS number 115 works? Now, let us go through first the 5 steps, okay? Before we take the number crunching, just see the 5 steps.
Yes.
The first step is you have to identify the contract with the customer. We know that you have the construction, the contractor on one side, that is your company. You name yourself ABC company. You are the contractor or you are the construction entity, and you have the customer, that is the railways. So you have 2 parties to the contract. Okay. And let's see the second step. That is, you want to identify the performance obligation, within the contract. In this case, it's a single performance obligation. What is that? You are promised to construct a tunnel. It's a single performance obligation. So that is why I didn't use the word, step number 2 is generally identifying the separate performance obligation. But here there's only one, okay, a single performance obligation to construct a tunnel. Look at step number 3, determine the transaction price. It is 13,500 lakh and changes to 13,800 lakh because of contract modification in year 2. And then the fourth step is not applicable because the allocation of transaction price applies only when you have more than one performance obligation in the contract. When you made more than one promise, then you have to allocate the transaction price, but here no need for you to do that. Then we go to step number 5. What is that? You are supposed to recognize a revenue. And here you are supposed to recognize a revenue over a period of time, that is over time, because you want to satisfy the performance obligation over time. In case you want to prove one should refer to para 35 of the standard. Now, please refer to para 35. No, it's there on the screen, reproduced. So, para 35 talks about, they say that when a performance obligation is satisfied over time, you are supposed to recognize revenue over time. And you can conclude the performance obligation is satisfied over time even if one of the following three criteria is met. Even one. So, in this sum will come under para 35B, because I'll tell you why. The land belongs to whom? The railways. And you are constructing an asset on that land that belongs to whom? The customer. So, customer is a railways over here. So, as you construct the tunnel, you can say the control over that particular good or service is what? Is transferred to the customer. So, therefore, the customer obtains control of the tunnel as an asset or as a tunnel is being what? Constructed. Therefore, you will come under para 35B. So, that is the reason we are going to recognize revenue over time. The performance obligation satisfied over time. Is that fine?
Yes.
Now, the standard goes on to say that in case you want to recognize revenue over time, you can go ahead and calculate the percentage
Completion.
or stage of completion. And one of the approaches, something called the, you have something called the input and output approach. And here I want to use a input approach. That is a cost incurred to date, whatever cost incurred first year, by the end of second year, by the end of third year, divided by the total estimated contract cost. I'm going to use that approach to find the stage of completion. Now, please refer to the, now we shall get into the number crunching. Now, let's see year one now, how to find the stage of completion. We know the cost incurred is 3,139 lakh and divide that by the cost estimated is 12,075 lakh. Now, the 12,000 lakh. By the end of year one is 12,075 lakh. So, 3,139 lakh is a cost incurred in the first year, divided by the total cost estimated at the end of first year, because you don't know there's a contract modification coming up in the next year, right?
Yes.
You're in the first year. So 3,139 lakh upon 12,075 lakh into 100, how much?
26%.
It will work out to 25.99 whatever, make it as 26% as a stage of completion for the first year. Now, what is a stage of completion by the end of second year? What you can do is, you can divide 9,102 should have been the amount. But here they given that includes what? 200 lakh materials not used on the contract by the year end will be used only in the next year. So, therefore, take 8,902 lakh in the numerator, the cost incurred by the end of second year, and divide that by 12,300 lakh is a cost estimated now, which includes a 12,075 and 225 lakh, right?
Yes, sir.
So, it's 12,300 lakh into 100, how much? It works out to
72.37%.
Remember, this 72.37% includes
the 26.
Exactly. It's a cumulative, right? Percentage completion. And then the next year will be, you can take 12,300 lakh and don't add another 200 lakh, because it should have been 12,100 lakh plus the 200 lakh. What wasn't used in the previous year would have been used in the current year. So 12,300 lakh is the total cost incurred, which will include what? Materials not used in the previous year but used in the third year, divided by 12,300 lakh, how much? 100%. 100%. So always remember, when you come to the last year, the year of completion has to be what? 100% complete. Okay, it's no brainer. So now we shall go ahead and take on what is the revenue to be recognized and the cost to be recognized and the profit to be recognized in each of the 3 years. Now this is how you should go about. Just see the solution out there. Okay. Now just say year one not an issue at all. Okay. So what is a percentage completion? 26%. You can apply that on the transaction price of 13,500 lakh, because that is the transaction price in year one, no doubt. So 13,500 lakh into 26%. How much?
3,510 lakh.
Is a revenue recognized in that year. And there is no revenue recognized already. It's the first year, right? 3,510 lakh. From that, minus a cost incurred in that year, 3,139 lakh.
Yes, sir.
So what is our profit for that year?
371.
That is our profit recognized in year 1. Now let us go to year 2. Now year 2, a catch. Now what you should do, apply 72.37%
on 13,800.
On 13,800 lakh. What is the amount?
9,987 lakh.
9,987 lakh. Okay.
Yes, sir.
And that minus 3,510 lakh already recognized in the first year. So only the difference will be what? Revenue for the current year, second year. How much?
6,477 lakh.
Okay, here I want to make a note. Okay, just notice this. Remember, 300 lakh was not recognized in the previous year, right?
Yes, sir.
Now tell me, what is 300 lakh into 26%? It will work out to 78 lakh. The 78 lakh is a part of, how much?
9,987.
That includes 78 lakh. Also, what is the revenue for the current year? 6,000?
477.
That includes what? The 78 lakh. That is called, that's a technical term. It's called the catch up adjustment. It's a catch up. Because the 78 lakh was not recognized in the previous year, but recognized in the current year, because the 72.37% includes what? The 26%. Yes or no?
Yes, sir.
Therefore, what is that called? It is called the cumulative catch-up adjustment. So, should I mention that separately? Not required. Is that fine?
Yes.
So, 6,000, how much you got? Revenue for the current year?
6,470.
Very good. And what is the cost incurred by the end of second year? 8,902 lakh. 9,102 minus 200 lakh. From that, subtract 3,139 already incurred in the first year. Balance how much?
5,763 lakh.
And that is the cost incurred in the second year. Now you strike a balance, the columns. Now tell me, what is the profit cumulative?
1,085 lakh.
And already recognized?
371 lakh.
Therefore, current year profits?
714 lakh.
So when you prepare the second year's income statement, you have to show only which one? The 6,000?
477
minus
5,763
and profit for the year
714.
These are the numbers for the second year only. Is that fine?
Yes, sir.
Now we go to year 3. Very, very simple. You can apply 100% on 13,800. So 13,800 minus what has been recognized in years 1 and 2, you subtract.
12,300.
No, that is not. No, I'm talking about the revenue.
Okay, revenue.
13,800 lakh minus 9,000, how much?
987.
Already recognized in year 1 and 2. So revenue for the current year, how much? Year 3.
It's 3,830.
Exactly. Similarly, cost also 12,300 lakh minus 8,902 already recognized in years 1 and 2 together, put together. And what is the cost for the current year?
3,390.
Very good. And what is our profit?
It's cumulative 1,500 lakh.
From that minus
1,085 lakh already recognized. So 415 is the current year.
Or you can also balance the current year column. We'll get the profit for the year. What is the current year revenue? 3,813. Minus what is the cost for the current year?
3,390.
You get the profit for the current year. How much?
415.
So take it from me, guys. The sum is very, very, very extremely important from examination standpoint. Okay.
Yes.
Learn the sum really well for examination. Good luck. Bye bye.
Thank you, sir.